A lot of times the skeptics, they say Bitcoin looks too good to be true. It's so good to be true. Someone's going to take it away from you. And that's based on a fundamental misunderstanding about Bitcoin. People refer to it as currency or digital currency, and that's unfortunate historical artifact. It's not digital currency. It's digital property. And once you make that big leap and understand it's property, you see the compelling use case is capital preservation for everyone in the world. There's no anathema associated with owning property. You can own $1 billion building in New York City. You can own every place in the world where they allow you to own property, which means China, Europe, the US. They're going to embrace Bitcoin as digital property. All the controversial issues around cryptos have to do with their use as a medium of exchange. But what I'm here to say really is medium of exchange is only worth $1 trillion. Store of value is worth $100 trillion. So I give your company, I give your family, I give your institution $1 billion. I drop you in Africa and I say, you got to save the capital for 100 years. What are you going to buy? And the answer is nothing. There is nothing on the entire continent you can buy that's better than Bitcoin. So Bitcoin's going to be embraced as property. It's going to be controversial if people think of it as a currency. So I would encourage people to think of it as digital property, $1 billion building in cyberspace. And hold it for 100 years.
Bitcoin enthusiasts and investors are on the edge of their seats as the cryptocurrency's price steadily climbs towards the significant $80,000 mark. With just a few days left until the highly anticipated halving event, optimism in the market is palpable, spurred by recent developments that hint at further bullish momentum. In a recent interview, Michael Saylor, executive chairman of MicroStrategy, discusses Bitcoin and its role in the financial ecosystem. He highlights Bitcoin's superiority over traditional assets like gold, equity, bonds, and real estate, emphasizing its digital nature, availability for trading 24/7, global recognition, ethical aspect due to lack of control by any single entity, and usefulness for transactions worldwide. As Michael Saylor predicts, every place in the world will soon embrace Bitcoin as a digital property. What was once an emerging technology has evolved into a global phenomenon, challenging traditional notions of currency and investment. As nations grapple with economic uncertainty and technological advancements continue to reshape our financial landscape, the inevitability of Bitcoin's widespread adoption becomes increasingly apparent. Let us now take a look at clips from Michael Saylor's interview as he gives out his powerful message to the world.
Bitcoin is certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold. If you could teleport gold from New York to Tokyo in a few minutes, people would like it. It's going to divert capital from risk assets and risk ETFs like SPY, and you can see that these ETFs are doing that. It's going to be incorporated into a lot of funds like the BlackRock Global Opportunities Fund or the Strategic Income Opportunities Fund. And so as it's an asset class. As it goes into other funds, it's going to become structural. The halving is going to cut the organic supply of natural sellers in half around April 20th. That means there's only about $32 million a day of natural sellers. And the price of Bitcoin is going to have to adjust up in order to meet that investor demand. So I think that's what's going to happen next to the asset class. It doesn't have to be a currency. Nobody's trying to buy a cup of coffee with a fraction of their building on Fifth Avenue, right? But every rich person I know owns property in London or New York City or somewhere, and none of them complain about not being able to spend their building as a medium of exchange. So the killer application is capital preservation for everybody. The store of value is the killer use case. Medium of exchange is a distraction. Governments are always going to issue currency. They're always going to make it legal tender, and that's just fine. Bitcoin's competing with gold. It's going to eat it. And then it's competing with risk assets as a long-term hold, and it's competing with you buying an Airbnb as a retirement income source if you're a middle-class person. No, there's no doubt in my mind Bitcoin was a better investment at 17,000 than it was at 65,000. I take the Warren Buffett view on this. Bitcoin's a superior investment to gold, equity, bonds, and real estate because it's digital. You can trade it 1,000,000 times faster than conventional assets using a computer. It's available. Most other assets only trade less than 20% of the time. Bitcoin's trading 168 hours a week. We bought $800 million of Bitcoin, and a lot of it we bought over the weekend when all the conventional markets are closed. It's global. It's the most widely recognized and trusted investment asset in the world right now. It's ethical because it's the king of all commodities. There's no issuer. There's no company. There's no country controlling it. And fundamentally, it's useful. Thousands of market makers can trade it all the time. Millions of companies can trade it. Billions of people. If you want to buy a house on Saturday in Africa, this is the way to do it. If you want to buy a car on Sunday morning, this is the way to do it. So it's a pretty great asset. It's the greatest of the assets, in my opinion. There's no second best asset. So I didn't have any question about it. We're just waiting for the rest of the world to realize how good it is. As for your second question, the halving, look, the selling in the market for the past month has been primarily bankruptcy estates that are liquidating GBTC at FTX or Genesis or the like. Once they got done rebalancing, the natural sellers are the miners. The miners can only sell 900 Bitcoin a day right now. They're only going to be able to sell 450 Bitcoin a day coming the end of April. As long as there's more demand in the market than the 450 Bitcoin a day, there isn't any catalyst to drive this asset down. It has no cash flows. The critics think that's a defect. It's a feature. With no cash flows, no quarterly results, no product cycles, this is the longest lived asset in the financial ecosystem with the least uncertainty. We're buying it to hold it 100 years. So that being the case, that $66,000 to $16,000 crash, that shook out the tourists, that shook out the non-believers. When it was 16,000, we were all ready to write it to zero. And that's what you'll find with the Bitcoin maximalists. So now we're writing it the other direction, and the protocol's working to everybody's benefit. There's just no reason why it shouldn't just keep adjusting up to find the marginal supply as the demand builds.
Bitcoin's ascent has also been fueled by reports of MicroStrategy's continued investment in the cryptocurrency. The business intelligence firm recently announced the acquisition of an additional 12,000 Bitcoin, worth approximately $821.7 million, using proceeds from convertible notes and excess cash. This strategic move further solidifies MicroStrategy's position as one of the leading institutional investors in Bitcoin, with CEO Michael Saylor reaffirming the company's commitment to accumulating Bitcoin as a long-term store of value. As of making this video, MicroStrategy boasts a Bitcoin portfolio totaling 205,000 BTC, acquired at an average price of $33,706 per Bitcoin. This substantial holding surpasses that of the BlackRock iShares ETF, which previously held 195,985 BTC, positioning MicroStrategy as a dominant player in the institutional Bitcoin investment landscape. Let us now go back to Michael Saylor's interview as he shares MicroStrategy's approach towards Bitcoin.
Yeah, so BlackRock is like the container ship or the super tanker of Bitcoin. They can take $1 billion a day into their capital structure, and they can haul that very efficiently, 25 basis points. MicroStrategy is like air freight. We got higher performance. So what's going on here? MicroStrategy's got leverage. If we borrowed $800 million at 62 basis points, is there any company in the world that you wouldn't like to invest in that could borrow $1 billion at less than 1% interest to invest in your best idea? So we get that very intelligent leverage. It's non-recourse, it's unsecured, and then we buy Bitcoin with it. That leverage gives us volatility. It gives us performance. The performance gives us volatility. The volatility attracts capital, and we can then leverage more. It's kind of intelligent because it's convertible debt. It's given our shareholders more Bitcoin per share this week than they had a few weeks ago. So it's very accretive for them. And it's pretty compelling for every investor. If you're Bitcoin curious right now and you want to buy Bitcoin at the all-time high, how do you get the upside in Bitcoin with downside protection? MicroStrategy sold 800 million in debt, and we have 12-13 billion dollars of Bitcoin on the balance sheet. So we're giving you an over collateralized loan and the upside. But if you're a Bitcoin maximalist and you love Bitcoin and you want to hold it forever, the ETFs charge you 25 basis points. MicroStrategy is accreting. We're giving you a yield against your shares in a tax efficient fashion. So the maximalists like the equity, the hedgers, they kind of like the upside with downside protection. The traders love the vol. You know, we've got 100 vol asset here, and they just like the vol. So we're unique because you can't really trade options on the ETFs. And an ETF isn't going to issue a convertible bond with upside to Bitcoin, but downside protection. We have now rebranded ourselves as a Bitcoin development company. Think like a real estate development company. And certainly the substantial amount of our enterprise value is based on our unique ability to issue securities and to purchase Bitcoin with convertible debt, with equity and the like. And so we understand that, but the only reason we could make this transition is because the software business was healthy. It does generate steady cash flow. It does allow us to issue debt, to issue equity. It does make us unique because we're able to, we've got a very functional options market. We've got a very functional debt market, and we've got a very stable operating business that we can use. If you look at our last result, we actually bought a lot of Bitcoin with operating cash or cash out of the operating business, and that is purely accretive to our shareholders. So we think we're unique, and that's working very, very well right now.
All of these recent events have sparked excitement among Bitcoin holders and investors, leading to a renewed interest in the cryptocurrency. As the halving event approaches and more institutions start to embrace Bitcoin, we can expect its value to increase even more in the future. Bitcoin is on track to reach the $80,000 mark, marking its growing acceptance in mainstream finance. This journey presents both new opportunities and challenges for investors and enthusiasts. At this point, Bitcoin represents more than just a digital currency. It embodies a fundamental shift in how we perceive and interact with money. With its decentralized nature and transparent blockchain technology, Bitcoin offers a level of security and trust that traditional fiat currencies struggle to match. As governments worldwide grapple with issues like inflation, currency manipulation, and financial censorship, the appeal of Bitcoin as a hedge against economic instability grows stronger. Bitcoin's borderless nature also makes it uniquely suited for a globalized world. In this age where international trade and commerce are increasingly interconnected, the ability to transact seamlessly across borders without the need for intermediaries or complex currency conversions is a game changer. Whether it's facilitating remittances for migrant workers, enabling cross-border e-commerce, or serving as a store of value for individuals in politically unstable regions, Bitcoin offers a level of financial inclusivity and accessibility that traditional banking systems struggle to provide. Of course, the path to global Bitcoin adoption is not without its challenges. Regulatory uncertainty, technological barriers, and lingering skepticism from traditional financial institutions pose significant hurdles along the way. However, as the infrastructure supporting Bitcoin continues to mature and public perception shifts towards greater acceptance, these obstacles are gradually being overcome. Already, we see signs of Bitcoin's growing mainstream acceptance. From institutional investors and Fortune 500 companies adding Bitcoin to their balance sheets, to countries exploring the possibility of creating their digital currencies based on blockchain technology, the momentum behind Bitcoin's adoption is undeniable. In the years to come, we may witness a world where Bitcoin is not just a speculative asset or a niche form of digital payment, but a cornerstone of the global economy. Every place in the world will soon embrace Bitcoin as a digital property, ushering in a new era of financial sovereignty, empowerment, and opportunity for billions of people worldwide. Do you agree with Michael Saylor's Bitcoin insights? Share your insights in the comments. If you found this video useful, please consider giving it a like and subscribing to our channel for more valuable content on cryptocurrencies and finance. Thank you for tuning in, and we look forward to seeing you in our next videos. As always, happy investing.